Bitcoin is going to 128K by July, but until then you have to survive the chop. And I'm going to break down in this video how the chop is going to happen, what moves Bitcoin is going to do exactly and precisely so that you can be prepared until July. If you missed Bitcoin at 25K or 52K, do not make the same mistake again. Bitcoin's weekly RSI at 45 has been a key support level during this bull run, and the first time BTC hit this level, it bounced from 25K to 73K, so we're talking 193% gains. The second time BTC pumped from 52K to 109K, so we're talking 107%. Now we've just hit the RSI support again at 76.6K. If history repeats itself and BTC follows the same pattern, we could see a 64% rally from here, taking us to 128K. Why 64%? Well, because of diminishing returns. But I don't think that this will be the top. I think Bitcoin will go on and do 200K, 250K and beyond. The trend right now is very clear. Bitcoin is following a predictable cycle, and the next move is going to be major. It's going to be huge. Bitcoin just reclaimed the 200-day simple moving average, and if it can sustain itself there, we might even be looking at all-time highs sooner than we think. That said, macro conditions are not supporting this overly bullish thesis. Historically, these reclaims are rare but powerful. In 2023, reclaiming this level led to a massive rally. In 2024, the reclaims all marked local tops. So what happens this time? Will BTC rally like 2023, or is it going to struggle at this level? I think we have something like 70% odds of struggling and 30% odds of maintaining and even going higher. With this in mind, pay attention to Bitcoin's perfect trap and why 95K could be the target before a real move down. The blue curve shows where the biggest liquidation levels are stacked. At 95K, there's a massive 6 billion worth of shorts waiting to be liquidated. A push to 95K makes perfect and total sense, because it's going to force the short sellers to close, triggering a cascading effect of buy pressure. But here's the trap. Everyone gets overly bullish at 95K, market makers and whales dump on retail, leading to a shakeout before we see more choppiness. The big rally is not going to happen in a straight line, so you should expect volatility. Currently, Bitcoin is moving sideways and it might feel frustrating, but if you understand liquidation heat maps, you'll see why patience is key. What this chart tells us is the aggregated liquidation levels for Bitcoin over the past 3 days, and it reveals some critical insights for the next few days or weeks. The yellow and orange zones are where the biggest liquidation levels are stacked. On the right, we see billions in liquidation levels above and below the current price. Bitcoin is hunting for this liquidity, and this means choppiness. This means we're going to go sideways before any major breakout. The 85 to 90K range is a very critical zone, and there's a very high concentration of liquidations waiting to trigger. So stay patient, because when Bitcoin finally breaks past these levels, it's going to lead to a huge breakout. Now let's talk about why we haven't hit the cycle top yet. The VDD multiple is one of the most reliable indicators for spotting Bitcoin market tops. Every major peak has been marked by spikes in the indicator as shown by the red zones in this chart, including, as you can see, this 70K correction. The black line represents obviously represents Bitcoin's price, and the green-orange red line is the VDD multiple. Right now, the VDD multiple is well below past peak levels, meaning Bitcoin still has a ton of room to run before any major blow-off top. Now let's dive deep into Bitcoin's supply drying up and what this means for the next move. So Bitcoin's hot supply, which are coins aged less than a week, has dropped from 5 to 2%, and that's a 50+ decline in just 3 months, showing a sharp reduction in liquid BTC available for trade. Similar contractions happened after 70K, and this just means that coins are moving from speculators into long-term holders, so we have to remain patient during this slow process. Now let's look at the AE oscillator, which is an indicator that signals bullish momentum when crossing 0.48. Over 80% of the time, once this level gets crossed, Bitcoin moves higher, and this happens usually shortly after. And right now the AE oscillator is hovering near this key threshold, so it's suggesting that we have another leg up and it could come very soon. Another key indicator is global liquidity, which is rising. So is Bitcoin bottoming out? This oscillator tracks global liquidity, And historically, when we have shifts from negative to green spikes, the market enters a bullish phase, and right now we just saw it spike green again. Right now we are seeing a reversal from negative to positive, and this matters because Bitcoin has historically followed liquidity trends, and right now appears to be forming a bottom. So this aligns with the thesis of liquidity expansion. The question is it going to be a prolonged expansion? Then we have the Alpha Crypto Sentiment Gauge, which tracks overall sentiment in the market. Right now, the sentiment is at all-time lows, meaning the market is maximally fearful and also uncertain. So just like before the previous Bitcoin breakout at 70K, we are in a very similar level. Every previous bull market top came after a period of extreme negative sentiment, and we are in the phase where smart money is accumulating. So again, we have to be patient. One thing is almost sure, which is the top is not here yet. And this top bottom index is a tool designed to pinpoint Bitcoin market tops and bottoms with very accurate precision. Historically, Bitcoin tops out when the index hits the red zone, which is close to a level of 1, and right now we're only at 0.3. Smart investors who bought during bear markets have not exited yet, meaning we are still at an expansion phase. Every past cycle followed the same pattern, and we are right on track with all the historical data. And this is not speculation, this is all backed by data. So Bitcoin's top is coming, but we're not there yet. And if history repeats, we will have one last massive and explosive move ahead. So be ready for the parabola. Another bullish trend is Bitcoin buying pressure, which is back. So the net taker volume metrics, they track market buys versus market sells. And yesterday evening, Binance traders pushed a massive almost $500 million in net buying. So we saw the highest hourly surge of the entire year. Such a strong positive spike suggests that confidence might be returning, and the main takeaway is smart money is stepping back in. Another major bullish trend is Bitcoin demand is surging. What this chart tells us is since February 23, at the 96K level, new investors have acquired 170K Bitcoin. And the orange line represents the massive inflow of demand. And this level of demand is comparable to what we saw after the FTX collapse, which marked the total bear market bottom. And this level of BTC accumulation suggests that investors believe in further upside. Historically, when demand spikes like this, Bitcoin has gone on to make higher highs. And so Bitcoin supply is shrinking, demand is increasing, and this is the classic setup for another massive move. So smart money is accumulating BTC aggressively, and that's the main takeaway from these charts. Now, my friends, let's look at the bearish side of things. Not everything is positive. This whole Bitcoin move to 86K was just a liquidity grab. The bright zones indicate high liquidity, meaning a lot of short positions were stacked there, and BTC pushed to that price zone precisely because it was all about wiping short sellers before a reversal. And this was not organic buying, it was just a liquidity grab. So after liquidating shorts, market makers often reverse the price, trapping the late long traders. If BTC doesn't break higher soon, this entire move could have been just another fake out. Also, Bitcoin longs are at risk. A drop could trigger a giant cascade. What this chart tells us is 86% of Bitcoin liquidations are longs, meaning most traders are leveraged to the upside. So if BTC moves lower, these longs are going to get wiped out, and we could get a massive cascading liquidation event. And other assets like ETH, LTC, Rune, they also have a ton of long exposure there. And finally, in a bearish case, what is going to be Bitcoin's next move? If Bitcoin drops to 80K, it's going to wipe out a massive amount of longs. The liquidation map shows big liquidity zones below current price. So what's the most likely scenario? The highest probability in the short term is a sideways market. This is how the market shakes out all the weak hands. Finally, I hope you have enjoyed this show. I hope you don't get shaken out. I hope that you stay here right until the end. I hope you like and subscribe because I will be giving more market updates daily like these. Thank you very much. I'm Gustavo and this is CoinTalk.